Market Chameleons and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Mitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor. Call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer. And
Alrighty.
while I'm sharing my screen, if anybody out there is joining us for the first time, Will and I, we do this show to try to help answer your questions about Market Chameleon tools, data, or analytics. If you want to come on the show and ask your question live, we provide a link to Zoom on that live chat. If you click on it, it takes you over to Zoom. Once you're in Zoom, there's a button at the bottom of the screen, raise your hand. Click on that button. When we let you in, everybody could hear you. You don't have to turn on your video camera. You could ask your question, then live, direct, navigate us to where you're looking at. If you prefer to type in your question, you could also type that question into the live chat on YouTube. Will's watching it. He'll read it back to me. And what we'll do is, while we're waiting for questions to come in or more people to join us, we'll start out taking a look at the pre-market report to see what's trading in a pre-market hours, see if we could get some insights from that. I could also default to some questions that I get over the email or the chat. We could discuss some of that. And if we don't get questions, we'll navigate to a different part of the website to see if we could use a tool to get some insights from another tool. Sound good? So pre-market report, these are stocks that are trading in a pre-market hours. We have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. Coming down here, I see 136 stocks made our percentage gainers list, 55 on the decliners. From this perspective, right now, we look like we're lining up for a more bullish bias at the open. If you look closer at the symbols that made this list, you'll see that there are small cap stocks in there. We have ETFs, leverage products. We could have a preferred stock in there, closed-end fund, could be a unit. So anything that is listed on the major U.S. exchange, if it's trading at pre-market hours and it meets our thresholds, it can make this list. So we want to take this list down to a smaller group of stocks, maybe more focused, to get a little bit better insight. And what we'll do is use the filters here up top and narrow this list down to S&P 500 companies. And to do that, I'm going to use this filter here in ETF, drop it down. You get a list of ETFs to choose from, some sector ETFs, broad-based ETFs. So the top one, SPY, that's the S&P 500 ETF. Let's click on that. And you can see that the list below gets filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And we do see here 38 stocks made our percentage gainers list, 5 on the decliners. So from that perspective, we're still lining up for a bullish bias at the open. Looks like maybe right now some of those fears about the banking, I think, is subsiding. We're not waking up to terrible news over the weekend or in the morning. The treasuries interest rates on the longer dated bonds have come in. I think that's stimulative, right? Because the mortgage rates are pegged to the 10-year treasuries, and mortgage rates came in. We saw housing market somewhat recover. And I think the consensus is starting to feel like maybe we are done raising interest rates for the year, maybe one more, and then we're going to come in. And that, I think, is starting to prop up some of the stocks here. What do you think, Will?
Yeah, I think you're absolutely right. I don't know how much the mortgage rates have actually come in, but certainly lower rates are going to be more stimulative for the economy. That's for sure.
Yeah, lower interest rates, oil prices came in. That's stimulative. The Federal Reserve did, in a way, pump more money into the economy through this lending facility. I think the banks tapped like $165 billion from their new lending facilities to prop up, the liquidity in the banks. And that somehow that money is going to make it right into
back into the economy. So you think
back into the economy. And it's somewhat stimulative, and the perception right now is that the Fed is backstopping deposits or guaranteeing deposits at this point, beyond 250,000, even for smaller banks.
can the Fed even by law do that?
I guess, that's seems like that's what they're doing. At least it's confusing because they give mixed signals. Sometimes they say they are, then they say,
Well, I think they can set up this lending program, but I think really it has to be, government, like the FDIC is something that would have to be voted on, and
it's
elections
confusing.
made. But who knows?
Yeah,
it's
right now
interesting.
they're saying if it's systemically critical, or crucial to the banking system. But that's kind of stimulative too, because now there's insurance out there that there wasn't, right? Whatever they're doing, if they're not insuring every bank, they're definitely extending it, because they did it to SVB, so it sounds like they're going to do it to other banks to prevent contagion. While
we did have a question. Laurent popped up and asked,
Okay.
Can Dimitri give his thought on the price of gold being so high in a market expecting rate cuts?
If gold being high, if the market is expecting rate cuts?
Yeah,
Is
that's the question.
Right. I'm not, as far as commodities go, I'm not a big person on commodities and how exactly, to price gold and all the things that go into pricing gold. If you'd have to look at supply and demand and mining and all that. But I think that right now we do have, if you look around the world, and the inflation is a global issue, right? Inflation is not just a US issue, and it's not an issue that can get pinpointed to one source. We can't say, well, it's because of oil prices, right? Or it's because of a shortage in here, or it's because of a supply chain bottleneck. We can't pinpoint that anymore. And I think that just the currencies around the world, right, are starting to deflate because we're getting lower productivity. We got a war going on. We flooded the markets with liquidity. Everybody was doing it. And I think that, gold traditionally, was the inflation hedge. If currencies were getting devalued, gold would go up.
That was always the thought.
I
mean, they had a whole world of gold bugs that would subscribe to newsletters, and a lot of the a lot of the supply and demand was around people who were very concerned about inflation issues and the printing of fiat currency. And it's kind of taken a back seat to the advent of Bitcoin and other cryptos over the last 5-6 years. But
right. And gold does have you know, a use case for
It
it,
has
right?
industrial uses,
It
correct.
has an industrial use, right? So it's a metal that's scarce, and it has a use, and historically people bought, you know, held gold. We were on the gold standard for a long time now, and officially, when did we go off the gold standard? In the 1970s? You know, as officially, that it's not that long ago that now we just have a currency that's backed by the, you know, the U.S.
Full
government.
faith and credit.
Yeah, full faith and credit of the government. And, you know, what we're doing now with monetary policy, what we're doing now, with the tools that are available, and they're creating new tools all the time, you know, with the quantitative easing and so forth. These are still experimental. We don't have a long history of data to support everything that we're doing here. You know,
It was August 15th, 1971, when President Richard Nixon announced that the United States would no longer convert dollars to gold at a fixed value, thus completely abandoning the gold standard.
okay. I mean, it's a while, but my point is, it's not
still an
hundreds of
experiment,
years.
right?
It's still an experiment stage, because you're creating a monetary policy around a different type of system, right? It's not your currency is not pegged to anything. In other words, you cannot convert it, you know, and go to a window and just convert it to something else. It's just an unit of exchange at this point, right? And it's people's faith in it. And the monetary policy right now, the things that they're doing, they're adding new tools or new ways to try to navigate, you know, the financial system. I would say they're very good at fighting deflation. As far as the tools go to combat deflation, we have excellent tools, because they flood right now they could pump the amount of money that goes out into the economy, and how quickly, you know, they could send out checks to everybody really fast. They could direct deposit them into people's accounts. You know, they could lower interest rates to zero and have the banks, you know, ease up, and, you know, their lending standards. So you know, you could go buy cars and houses, and they're very good and very quick at combating deflation. However, as far as the inflation part of it goes, it's a little bit trickier. Especially, you don't want to walk into stagflation, where the economy is going down, but inflation persists. That's really hard. And so far, I don't know of any tools that they've had. You know, we haven't been in this situation that many times that could get us out of that, right? Like, how do you get out of stagflation quickly? That's really, really hard. And you know, and then they got all these other fires that they have to put out in our financial system, you know, with the banks and contagion and so forth. And we got a war going on. Huh?
One of the tools they were eliminating to slow inflation was actually the buying of the debt, but from banks, right? They were actually going to start selling debt that they had on their books already into the market.
Right.
And now they're
right. And they're you know, when we talk about the things that are right now weighing in on inflation, of course, monetary policy is a big thing, because, you know, they control interest rates, and they could throw money out into the economy pretty quickly through you know, easing up lending standards and crushing savings rates. But there's also fiscal side to it, and the fiscal side is independent of the monetary side. And the fiscal side is running continuous budget deficits. And that's inflationary because the government, collects X amount in dollars, but they spend, X plus whatever percentage above it. And that's creating inflation. It's stimulative, and it's fine to do, I think, in periods of deflation and higher unemployment. But when we have inflation and full employment, it doesn't make sense from a model perspective. If you're running a model and we're saying, why are we running budget deficits right now? Because we should be raising taxes and cutting spending because we need the surplus, right? This is the period you need a surplus, right? If you're not running a surplus when you have full employment and the economy, inflation going up and the economy, booming, if you're not running a surplus, when are we going to run a surplus? Unless we imagine we'll never run a surplus ever again, we're going to run deficits until it just all collapses. Eventually it'll catch up, right? Eventually it's just going to catch up to you. And that is inflationary. We talked about it before that we have right now forecasting forward. And we talked about, it doesn't matter who's in power. It doesn't matter, who isn't in control. We always are running budget deficits. Doesn't matter what the economy is, who is in control. It doesn't, inflation, deflation, interest rates low, interest rates high. We're always running deficits, and that is inflationary because you keep just pumping out more money than we're bringing in, right? The government is collecting $1 but spending $1.20 or whatever it is. That means they have to print that extra money to spend it. So the fiscal side, I guess my point is that the fiscal side is continuously inflationary. It's continuously creating inflationary pressure. And the monetary side cannot fix that part. They could just try to go, destroy demand in the private sector, right? To slow it down, but they can't stop the fiscal side. That would be up to Congress and so forth to do. I wanted to, if we don't have questions, maybe I did write a question down. I'll quickly go over.
All right, cool.
And this question I'm bringing up because to me it sounds very odd, but if it keeps coming up, that means other people doesn't sound odd or it sounds reasonable. And it's asked in different ways, but one of the things that people sometimes say, and I think it's a lot of people who are very new to investing in trading. Okay, so you got to be pretty new in my opinion, which is fine because you have to start somewhere and you got to learn. But I get this, Dimitri, there's like too much data and too much information, right? There's too much data, too much information, just simplified down to like a number. And
one number.
Yeah, exactly. One number. And when we talk about trading, that is what trading is. It's assessment of data and information. I think it was Paul Tudor Jones, the billionaire hedge fund, who said that if you want to be a trader or an investor, you have to have this insatiable appetite for information and data. So for trader, if you want to be a trader, to say there's too much data or too much information, it's like, a basketball player saying there's too much running around and dribbling. Tell me how to do it without having to run or dribble or throw the ball. It's an odd question because that's what trading is. I think some people believe that if you open an account with a brokerage firm, you fund it, and you have an execution system that allows you to buy and trade, to buy and sell stock, then you're a trader. But no, you could execute a trade, but that's not what trading is. Like I could go and buy a thermometer at CVS. That doesn't make me a doctor, right? It's assessing that information. A doctor looks at the information, creates a diagnosis. A lawyer, think of it, looks at evidence, looks at the data and connects it to the law, and then can create a case. And just like a basketball player, it's assessing, it's practice, practice, and practice. So you could be able to assess the information that's coming in during your game, so you know how to react. So there's no such thing as too much data or information. That's what trading is. It's trying to consume that information, to process it, to know how to process it, so you will be able to spot the opportunities on your own independently. Okay. And that kind of ties into another thing that I get question again, and I'm trying to kind of help those that might be starting out, because I get other questions too that are just kind of more specific and advanced, and those I appreciate as well. But these are people who are starting out, and a lot of them, kind of might say like, well, what should I do? Dimitri, what should I do? And trading is not something that somebody tells you what to do. Okay. That's not what trading is. Trading is your ability to assess the information, and knowing, what are the best actions I should be taking. Because somebody telling you what to do is implying that there's some kind of a process that involves no skill or experience or knowledge, and that somebody could give you a process and you just sit there and you do it. If somebody says buy, sell, that's a process like in a fast food industry, right? And if there's a process that involves no skill, no experience, no knowledge on your side, then we know what the market is for that, right? It's probably like minimum wage, right? That's what you're looking for, minimum wage job, basically, right? And trading is not a minimum wage job, right? So there's no such thing as tell me what to do. You have to build up those skills. You have to build up your knowledge, so then you would have that expertise, right, to be able to trade and make those decisions. So there's no such, you could go and try to apply for a job on Wall Street and say, I'm here to be told what to do. Okay. Try to do that. Go there and say, I just want to sit here. You tell me what to do and I'll do it, and see if you get hired as a trader, because that's not going to happen. Right. Because that's not what a trader does. So those are two things that kind of come up. And I think that, to me, it always sounds odd, but because I see different variations of that question, it must not be odd to other people, because I think it's very easy to open an account, to fund the account, and to get access to buy and sell financial instruments. And when people do that, they think they're already like 99% of the way there, but really they're maybe only 0.5% of the way what they need. So don't confuse that you have an execution system that allows you to buy and sell stock. That doesn't mean that you're already a trader. All it means is that, yeah, you can go and buy and sell stock, and you could gamble if you want, but that's not what trading is, right? Trading is assessing information and data and making decisions off that. It's like building a system around it and building your knowledge and skills around financial information and data. How do I take the data, and once you start understanding the information, then you're going to be able to combine it into some meaningful insights. All right. So I don't know, Will, do we have any questions? If we don't have any questions.
No, we had the one question earlier from Laurent about gold, and you gave your opinion, which was very cool. And awesome job, my friend.
Yep. All right. Well, everyone, thanks for joining. Stay safe out there. Have a great trading day. A reminder that this Thursday, Friday, and next Monday, we're not going to do the morning show. I'm going to be away. So we're going to skip the show, but tomorrow or after tomorrow, if you guys have questions, we'll be here and then start the next following Tuesday.
Yeah, and if you can't make the show live to ask your questions, you can also always email support@MarketChameleon.com. I'll put that in the YouTube link. Awesome job, Dima. You have a great day. Safe trading day, everyone. Bye.
All right. Thanks, everyone. Stay safe.